If Trump pulls out of the Iranian deal, give me the play out in the FX markets.
Well, I think that the first thing will be the oil price, and that will be where it starts. So if the oil price, therefore, goes up, now, of course, some of this is already in the price. We've seen this morning the price was a little bit softer, but if, say, he does pull out, so the oil price goes up, the market's immediately going to start thinking about inflation. That's going to obviously come back to central banks, interest rates, and then you get an impact on the currency markets as well. Now, you also, of course, get an impact on global growth. And if the markets are concerned about the impact on global growth because of the impact of oil, well, that, of course, is going to spook some safe haven trade. So you could see the yen performing a little bit better. Certainly, I would imagine in that sort of environment, it would be another piece of bad news for emerging markets. Now, we have already seen emerging markets under pressure the last few months. That will probably be another
Powell's
factor.
comments today on EM, I mean, can they weather the dollar higher US rate storm or not? What's your take?
I think they're part of it. I mean, really, it's only recently that people have started to talk about the dollar recovery. But actually, if you look back, since around about early February, at least around about a 3-month view, the dollar's been quite a well-performing currency. So, for instance, in that time horizon, it's performed well against Eastern Europe. It's performed well against most LATAM. It's performed well even in the G10. So it's been doing well. And I think part of this story has been a couple of things. It has been, first of all, slower growth because of, or fears of slower growth because of trade wars, risk appetite diminished, people no longer, pushing each other out of the way to try and get high-risk currencies. But there's also been concerns about the US interest rate scenario. US interest rates go high. Now, this has been a story for a while, but the market's only recently begun to pay a bit more attention to interest rate differentials. Well, that's not very good for some emerging markets, some more than others. There's still quite a lot of dollar-denominated debt per capita in some Asian countries, and I think those currencies are a bit of a litmus test, really, for risk appetite when it comes to looking at the Fed.